This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending January 21st, 2023. Our question this week is, what is the debt ceiling? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average increased 1% on Friday but was down minus 2.7% for the week. The S&P 500 increased 1.89% on Friday, but was down minus 0.66% for the week. The Nasdaq increased 2.66% on Friday and was up 0.55% for the week. Looking at the week, we can see that there were 4 up finishes versus 8 down finishes for the major indexes. The market was closed on Monday. On Tuesday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Wednesday and Thursday, all the major indexes finished down. On Friday, they all finished up. New unemployment claims were 190,000, the lowest in 4 months. Home builder sentiment rose in January. Mortgage rates fell for the 3rd consecutive week. Existing home sales fell for the 11th month in a row. Crypto lender Genesis filed for bankruptcy, and Fed Governor Waller indicated that he will back a quarter-point interest rate hike at the next Fed meeting. New unemployment claims, home builder sentiment rising, mortgage rates falling, existing home sales dropping for the 11th month in a row, a crypto lender going bankrupt, and a Fed governor backing a quarter-point interest rate hike are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is the debt ceiling? The U.S. debt ceiling is a self-imposed debt limit on how much debt the U.S. can incur. It is a legislative limit on the amount of money the U.S. can borrow. Because it is debt, it is money that has already been spent. The U.S. debt ceiling is akin to your credit card limit. The difference is that Congress can raise the limit or ceiling anytime it wants, or it can eliminate the ceiling altogether. You, on the other hand, cannot raise your credit card limit. You have to ask Visa or MasterCard or American Express to raise your credit limit, and they may say yes or they may say no. If the U.S. does not raise the debt limit, then the government cannot spend any more money, and the U.S. credit rating will take a big hit. It would cost the U.S. government more interest to borrow money in the future. Well, the U.S. must spend money, so not spending more money is not an option. Thus, the debt limit will be raised. The political theater that takes place before the limit is raised is entertaining. It will affect the economy and the stock market. However, it is just theater. Are your stocks affected by the debt limit theater? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI. That is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is the Southside Trading Watch List from the week ending January 21st, 2023. The strongest performer on the list this week was Grayscale Bitcoin Trust, ticker symbol GBTC. In the third column, it was up 6.28% on Friday and increased 7.6% for the week. Grayscale is an investment vehicle similar to an ETF that enables investors to gain access and exposure to the price movement of Bitcoin without buying, storing, or safeguarding Bitcoin directly. Looking at a summary of results, you can see that Grayscale has increased almost 47% year to date. I own Grayscale shares. I do not generate cash flow from it because Grayscale does not have option contracts. I use options to generate cash flow from stocks. I use Grayscale as an indirect investment in Bitcoin. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System outperformed the S&P 500 Index ETF SPY in 2022, and after 3 weeks in 2023, the portfolio is outperforming the ETF again. The Southside portfolio is up 15.95% versus 3.52% up for SPY, a difference of 12.43%. The Southside is beating SPY by more than 12%. The cash flow generated by the Southside cash flow system for this week was 7.26% of the portfolio account value. The account value changed by 0.62%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.66%. Bitcoin Watch. Bitcoin gained 8.57% this past week, but it continues to be in a bear market. It is down more than 67% from its all-time high, which was achieved in November 2021. I sold an option contract on one position this week. It was a put that ranged from $0.00 to $157.36. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3, and they are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.